TurboTax doesn't catch this mistake, which could cause you to pay tax twice. This is the surprise that catches a lot of people off guard. Huge, large tax bill that you are on the hook for. This is why. It's because, fortunately, it might not be too late for you to actually reduce your tax bill. Okay, let's talk about the taxation of your RSUs. So when your RSUs vest, that is a taxable event. So as far as entering it into TurboTax, it's actually pretty easy. So let's go ahead and pull up the personal section, personal income. We're gonna select, I'll choose what I work on, and then we're actually gonna pull up the W-2, and I'm gonna go ahead and hit update here. Now hopefully it's just as simple enough as entering in your W-2 into this form, but let's go ahead and click review here and just double check things. Let's go ahead and scroll down where it says continue. Now on this page, we're going to see the important information found in box 1. There's different types of qualified equity compensations that completely avoid the FICA tax or Social Security and Medicare, but when it comes to RSUs, they don't necessarily avoid those taxes. So let's go ahead and look at box number 1. Now I want you to think of what your salary was for this year and how many RSUs vested. So on the date that your RSUs vested, they're going to take the fair market value of the RSUs on vest and they're going to put it in there into box 1 in addition to your salary and any other bonuses or ordinary income that you may have that flows through to box 1. So you'll want to double check that number and make sure that it's correct. This is the surprise that catches a lot of people off guard, is box number 2 is talking about withholdings. Now RSUs do have withholdings, but companies usually withhold at one of two rates, and that's either 37%, which is currently the max rate right now, or 22%. So oftentimes people, they will have it fixed at 22% and they haven't talked to their HR department to get that raised to, let's say, 37% if they're in the 37% tax bracket, and so they didn't withhold enough. And so in the federal refund section, there's going to be not a refund, but a tax due. And maybe it's a huge, large tax bill that you are on the hook for, and you might be wondering why that's the case. This is why. It's because your company withheld at 22% and you probably could be in the 35 or 37% tax bracket and didn't unfortunately withhold enough. So this causes a lot of people some shock, some sticker shock, some surprise, and that's what caused it. And in order to fix it going forward, it's really important that you work with your HR, make sure that your withholdings are accurate for your current tax rate. As far as reporting the vesting of your RSUs, it's pretty simple. And same with the sale of RSUs, it's gonna be pretty simple as well. You may be a little disappointed in the amount of taxes that you owe this year, but the good news is that it might not be too late for you to actually lower your tax bill. But CPAs and TurboTax tell you how much you owe, but the goal is actually to owe less. That's why I created my firm TechWealth to specialize in owners of equity compensation to minimize taxes and optimize your equity. So if you'd like to work together, more information in the description below. So if you held on to your RSUs and you didn't sell them immediately, then you're going to have to report either a gain or a loss on Schedule D. But let's go ahead and show you where exactly that gets reported. Let's go ahead and go to the personal section, personal income. Select, I'll choose what I work on. Then we're gonna scroll down to the investment income 1099B, and we're gonna see this right here where it says stocks. Let's go ahead and hit subscribe to my YouTube channel. Then ask the question, did you sell any of these investments in 2023? Now, your RSU is no longer an RSU. Or RSU is a restricted stock unit, and as soon as it vests, it's not a unit anymore, it's actual physical stock. So that's why it's showing up here on this page. Now, if we go down, we'll see that this section is for us because it says this section covers these forms and files. And these are the ones that are going to be applicable, 1099B and also 8949 and Schedule D. Now we also know we're in the right place because these two forms are referring to other types of qualified equity compensation. So we know we're in the right place. So let's take a look at what is on the next screen. We'll go ahead and hit yes. Now we've got stocks and bonds, mutual funds. We've got this option selected. And again, we know that we're in the right place because it says 1099B and has those other two forms for qualified equity compensation plans. Let's go ahead and hit continue. Now this is going to pull the 1099B information directly from your brokerage. So this could be Fidelity, it could be Schwab, Carta, E-Trade. So you're welcome to connect the accounts there. For the sake of this example, I'm going to hit skip import. And because I'm most familiar with Tesla and SpaceX employees, I'm going to put E-Trade in here, seeing as that's where they currently brokerage out of. Then it asks these questions. Do these sales include any employee stock? And it says specifically RSUs. The answer to that is yes. Then it's going to ask if there are more than 3 sales. And for simplicity's sake, let's go ahead and say that there are not more than 3 sales and hit continue. And then we're going to enter these things in one by one. Now you'll want to ensure that you have your 1099-B handy because this is going to have the important information that we need. I'm going to hit continue, and this is the most important thing that I would like to share with you today is that on the 1099-B, if we come down to the bottom here, it's going to talk about cost basis, and specifically cost basis being incorrect. Now this is where double taxation happens on all types of different equity compensation packages, is where you're taxed, for example, in RSUs when they vest, and then when you sell the stock, your 1099-B, the brokerage firm, so again, whether that's Carta or E-Trade or Morgan Stanley, they sometimes report the basis of that as 0. They're going to say, hey, this person has no basis in this stock whatsoever, when in reality, you actually paid taxes on it when the RSUs vested. And so this causes a problem of double taxation, where your 1099-B is reporting a big fat 0 as basis, when in reality, your basis should be the taxes that you paid, or the fair market value when you pay taxes as your RSUs vested. This is why I highly recommend working with a professional, because it gets really complex. I'm just a random guy on YouTube, so please don't take this as investment, legal, or tax advice. So you'll definitely want to make sure that you have the correct basis being reported. In fact, when you hit continue here, it's going to ask about the cost basis again, and making sure that your cost basis is accurate, because TurboTax knows just as well as you do by now, hopefully, that your basis can be incorrect. And so it's important to grab this supplemental form that you see here and make sure that you adjust the basis to accurately reflect the amount that you've already paid taxes on. Fortunately, it might not be too late for you to actually lower your tax bill this year. So let's go ahead and click on personal and then deductions and credits. Select I'll choose what I work on. And then we're going to scroll down to retirement. And then there's a traditional or Roth IRA. Let's go ahead and click start. So with a traditional IRA, you can actually contribute regardless of your income. The problem is that if you make too much, you can't deduct that contribution. So if you think you earn too much, just know you can always contribute, but you just can't always deduct it. So let's see if that's a possibility for you or not by clicking on traditional IRA for both you and your spouse if you're filing jointly, or if you're filing single just under your own name. Now you'll note on this page that it says answer yes if you plan to make a regular contribution by April 15th of this current tax year. So it's not too late to make a contribution and reduce your tax liability, assuming that you're able to deduct that contribution. Go ahead and click yes. This typically isn't the case, so I'll select no. So this is where it asks us how much we actually contributed, and this is where we're going to play with the numbers and see if there's a benefit, and if so, how much of a benefit we can get by contributing. Obviously, we want to stay within the annual contribution limits, but feel free to play with the numbers. Let's take a look at the second way that we could potentially reduce our tax liability this year by going back to personal and deductions and credits. Select I'll choose what I work on. Then we're going to scroll down to medical. Under medical, it says HSA. That's where we're going to click update. And if you have an HSA that you were able to contribute to for the previous tax year that you're filing for, you may be able to make a contribution here and actually deduct that contribution. Let's go ahead and say that both of these individuals had access to a health savings account. Click continue. We're going to assume that they didn't use their HSA to pay for medical expenses. By selecting no, hit continue. In this example, they didn't inherit the IRA. And did Olga put money into the HSA this year? Let's go ahead and select yes. And this is where, again, we're going to play with the numbers based on how much we actually have to contribute to an HSA. And if we want to do that, then we can see how much of a tax benefit it's actually going to provide us.